You've seen a week of 3%, 4%, 5% down, and that's just indexes. That's not stocks. Stocks, we've seen double-digit downs in certain stocks for 3 and 4 days in a row. Historic moves that we haven't seen in a while. But something is being swept under the rug right now, and that something is Q1 earnings. I want to talk really quick about how not to trade earnings like 99% of everyone else. I want to give you a formula for predicting prices after earnings and how we trade these event-driven prices. And I want to give you my top earnings picks for the next 30 days. So when we're looking at earning strategies, you could take a look at a stock and you could see it kind of moving back up into a certain area. And you might think, oh, I'm going to jump on that stock right before earnings. Folks, don't buy right before earnings. Right before earnings, especially in markets like this, you're going to see really high option premiums. And those high option premiums can be high today, and the earnings can come out. Maybe the stock even goes in your favor, but you could still lose the majority of that option in time premium. We don't want to do that. And maybe you're thinking, some of you might be thinking, well, wait a minute. What about puts? What about buying put options? Does that make sense? Well, buying put options, you might not make that much money either. You could see the stock drop, and yet there was so much premium pumped up into that option right before earnings that even it might not make money. So there are 3 ways to trade this market. The novice person who listens to news and makes a subjective move in the markets based on what they hear. In fact, there's a reason why that screen behind me is muted. And I don't unmute it when I'm done talking. I leave it muted. I leave it muted because I don't want something or someone to cloud my judgment. So we could sit and listen to news and listen to people who don't have a stake in this whatsoever. We could look at technicals. The problem with technical analysis when you get high moves, these big volatile moves like this, is that you almost have to throw out technical analysis. So we got to look at being a rules-based trader. And a rules-based trader in this type of environment looks for repeatable patterns and also looks to, if you're going to get out of the longer-term trades and you're going to get into looking at things that make sense, have an event that at least gives you a chance to see higher volatility now or higher stock prices now because of an event coming up and not so much because of all the crazy news that's going on surrounding the overall markets. So one thing we can do is we can break earnings price moves. And to do that, we're now going to start seeing Q1 earnings. We can look at Q1 earnings, and for earnings that happen this week, we could take this week's options, the options that expire on Friday, and we can look at the at-the-money calls and the at-the-money puts, add those two together. It's going to give you the idea of where, I call it the over-under, on the stock price for earnings. So if I take a stock, XYZ, and I add the calls and puts up, and the calls and puts together represent 10% of the stock price, that means that the over-under is going to be 10% on the stock, more than likely. Right? Option traders have the ability to determine a very high probability where that stock's going to be. But what about price direction? How can we predict price direction in earnings? Well, we don't predict it. A good trader, a smart trader, doesn't predict through earnings. They predict up to earnings. And so, for instance, what does this chart show us? This is a chart, blow this chart up here, please. This is a chart of meta platforms. And you know what I see here? I see areas where we see that the red line is going to be implied volatility. Boom, and it drops. And then rises and boom, it drops. It rises and boom, it drops. This is before earnings. This is right after earnings. This red line up before earnings, big move down after earnings. And it happens time and time again. And look what's going on here. It's already on the rise. So what does this tell us? Well, these earnings are coming up soon. In fact, Meta's aren't out for 26 days. It's already on the rise, but a lot of that's because of the price that's going on right now. But is Meta likely to move higher into earnings? Yes. You know what else happens with Meta? 7 days before that, for the last 3 quarters in a row, have actually moved higher. So we got a little ways, but Meta looks like a really good bullish strategy when people start talking about its earnings. Now, what does this chart show us? This is a chart of Netflix. And I don't show all last 4 quarters. I show the last 3. But 3 of the last 4 quarters, Netflix shares have actually dropped into earnings. Last quarter, they rose a little bit. But again, this chart shows us a stock that has tended to drop into earnings. So here are the next 30 days. This is one you're going to want to take a snapshot on. Meta Platforms, bullish. Intel, bearish. Tesla Motors, bearish. Fair Isaac, that's FICO, bullish. UPS, bearish. Netflix, bearish. Bank of America, bullish. And Boston Properties, bearish. They're not all tech stocks, right? There is quite a bit of division here. What do these all have in common? I'll tell you what they have in common. They have between 75 and 100% of the time over the last 4 to 5 earnings cycles, we've seen these stocks move in a specified pattern before the earnings are announced. Okay? So Meta Platforms, we've seen it typically move higher the week prior to earnings. Netflix, we've typically seen it move lower the week prior to earnings. And all the other ones right here, I've given you all the clues to these. So if you're a stock trader, you might look at a short-term buy on the bullish or a short on the bearish. If you're an option trader, however, this is the time to buy calls if you're bullish or to buy puts if you're bearish, but only when we're 7 days out. The only one that might make sense right now, when you look at the calendar days to next earnings, we're getting real close on Bank of America. All these other ones, we got a little bit of time. But I thought I'd do that chart right now just to get you started. So what do we do with this information? You want to verify the earnings dates because my data, although it's good, isn't perfect. I want to enter that optimal day, and 7 is just a good starting day. What I do is I look at each and every one of them, and I optimize them to find out what is the best day to enter and what is the best day to exit. I use near money options. I use the expiration date that expires after earnings because that's the one that's going to get the best swing in time. And I exit the day before the announcement. And that's how we trade earnings.